Hello, everybody. Welcome to Monday. The fourth quarter got off to a really good start today with the S&P 500 being up 2.6%. And really, probably the biggest cause is just how much the market had stretched to the downside. Again, one of the measures that I use is called an RSI, Relative Strength Index. And when it gets below 30, the market's considered oversold. It got down to 26 here, really stretched. Even in 2008, it rarely got to the 26 level, although it can go lower. It actually went to 23 in one portion of 2008. So you never know, but you're bound to have more bounces in a market like this when you get that stretched. So the real key will be, okay, now that we've had this bounce, what happens next? Does it carry through? Because we had a bounce last Wednesday. Market went up about 2.1% on the S&P, and then it failed the next day. So I'd like to see some carry through. There's three levels of resistance above where we are. We actually got through one of them today. They get harder as we go here, actually. So the next one, that's coming up at around 3,700, 3,750. That zone, is a little bit harder, and then around 3850 to 3900 be the zone after that, and that's even harder to get through just because of how much time the market has spent at some of those places. So, we'll see what happens here as far as that goes. Not surprised to see a bounce. We still have, the situation that's going on, but we had some news today that seemed to help. Number one is that, England decided to take back their tax cut for the top bracket. Market seemed to respond positively to that. And also we got a Institute of Supply Management report. That's really a factory report that came out showing things are slowing down in the factories, which would be a good thing in the sense of maybe the Federal Reserve can stop raising rates as much because things are slowing down. Unfortunately, that's what the market's been jumping on in the past, and then the Fed is kind of ignoring those slowdowns, and like we're seeing slowdowns in housing, and it continues to raise rates, mainly because we're still seeing inflationary pressure in the measures that they're looking at. We do get the CPI report here for inflation in just in 10 days on the 13th of October. So it'll be interesting to see what happened with inflation in September. How does the market react to that? Did it drop some because we're starting to see slowing, or is it still sticky and staying up there? Because last time that happened, the market ended up, basically falling pretty consistently after that report came out. So I'd be very cautious here, kind of waiting for that to happen. Because the other part with this factory report that's kind of interesting to me is that it's down, which is good from an inflationary standpoint, but it also tends to lead earnings down, and earnings haven't been adjusted downward that much. And quite a few of the companies that have come out and said that they were going to have some earnings adjustments, like Federal Express, have had really big drops in their price, and so again, there's some kind of pros and cons here. I don't know that the market has factored in this potential earnings recession that we might be heading through here. So good time to stay cautious, good time to stay where we are at in the portfolios, in my opinion. We'll wait and see what happens, see if we can get some carry through forward on this upward motion here, and see how things play out. But a good day today. Look forward to seeing what's going to happen tomorrow. Thank you very much.